Do you know that Fibonacci levels can be the important source of liquidity for the smart money? In this video, I will teach you how to apply Fibonacci levels to identify significant liquidity clusters. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. And if you just started learning smart money concepts, you are probably wondering what is liquidity. Liquidity represents certain areas on a price chart where a lot of big players place their orders. Generally, liquidity clusters match with the horizontal key levels. The market participants are placing buying and selling orders on key supports and resistances. Key support represents a relatively safe zone to buy the market from, while a key resistance represents the safe zone to sell from. For that single reason, the key levels attract the market participants. However, key levels are not the only source of market liquidity. Quite often, Fibonacci levels can attract buying and selling orders. However, the problem is that there are a lot of Fibonacci levels, and for the newbie traders, it is quite complicated to get which levels exactly will be important for smart money. In order to identify Fibonacci liquidity clusters, you should look for the so-called Fibonacci confluence. Take a look at gold. Here are the liquidity clusters that I spotted analyzing the horizontal and vertical key levels. The market participants are placing the selling orders on key horizontal and vertical resistances, and they place the buying orders on key horizontal and vertical supports. However, Fibonacci analysis can reveal one more very significant liquidity cluster. Traders, don't miss my free signals and forecasts. Subscribe to my free Telegram channel now. It is called Vasily Trader. The link in the description below. But first, let me share with you some important theory. The market never goes just straight up or down. The market always moves in zigzags, in the so-called impulse and retracement legs. And Fibonacci's can be applied for the analysis of impulse and retracement legs. With Fibonacci retracement tool, you can analyze the price action legs. Take a look at that bearish impulse. Based on that impulse, you can draw Fibonacci retracement levels. You simply take the high of the impulse and you draw the retracement levels until the completion of the impulse. And the problem is that here we have a lot of Fibonacci levels. And of course, from such a perspective, these levels don't mean anything. Remember that bearish movement can easily occur within a global strong bullish impulse. And based on that impulse, you can also draw the Fibonacci retracement levels. If the impulse is bullish, you draw the retracement from the low to the high of the impulse. And here your task is to look for the so-called confluence. There are the certain points on the chart where the Fibonacci retracements of different levels match, and your task is to identify such points of confluence. You can see that here we have a perfect match between 322 and 618 retracement, and the confluence, the point of confluence, gives you a significant liquidity cluster. And now back to gold. So here we have a price action since the beginning of this year. And here we can identify a very significant bullish impulse, a very significant bullish wave, and within that wave, then the market started a correctional movement, and we see the sequence of the bearish impulse, retracement, and one more bearish impulse. Based on the price action legs that we identified, we can execute the Fibonacci analysis. We can take that bearish impulse, and based on that bearish impulse, we can draw the Fibonacci retracement levels from the high of the impulse to the lows of the impulse. We draw the Fibonacci levels. Then what we can also do, we can do the same thing with our global bullish impulse. From the low of the impulse to the high of the impulse, we can also draw the Fibonacci retracement levels. And take a look, traders, what we have here. We have a perfect confluence between 50% retracement levels. And if we look left and if we check how the market was reacting to that confluence cluster in the past, we can spot that in the past, a lot of times, that structure was respected. That cluster was phenomenally important for the market participants. And with the classic structure analysis, we would not notice that. Once you executed the Fibonacci analysis, do not forget to clean your chart and remove all unnecessary Fibonacci retracement levels and remove the impulse legs. Pay close attention to the liquidity clusters that you spotted, because from the liquidity clusters you can look for relatively safe trading opportunities. Let me know, traders, in the comment section if you want to see more videos about Fibonacci's. Also, traders, do not forget to subscribe to my free Telegram channel, the link in the description below. Thank you so much for watching, like this video and subscribe to my YouTube channel.